They say the market tests every weakness a trader has: fear, greed, doubt. And the moment you think you've mastered them, the market reminds you that you haven't. Every trader dreams of catching the big move, that perfect wave that turns a modest position into life-changing profit. But most never ride it to the end. They get shaken out just before the move truly begins. I've been there. I've felt that electric pulse when a trade starts working, then the creeping anxiety when price pulls back against me. The chart flickers, the unrealized gain shrinks, and the mind starts whispering, "Take it. Don't let it slip away." That whisper is where most traders lose their edge. Jesse Livermore understood this better than anyone. He didn't just trade markets. He traded human emotion. He said, "The market does not beat them. They beat themselves, because though they have brains, they cannot sit tight." That single sentence explains why most traders never see the full potential of their trades. The problem isn't the setup. It isn't the market structure. It's the human urge to control what cannot be controlled. Livermore's greatest trades were not made in moments of action, but in moments of restraint. He understood that the biggest profits are made by doing nothing, by holding strong when the market tests your conviction. But holding through volatility feels like standing in the middle of a storm. Every tick against you feels like a personal attack. Every retracement feels like betrayal, and your mind starts building stories. It's reversing. I'll lose it all. That's when traders cut profits short, only to watch the market run exactly where they thought it would. The irony is painful. The market rewards patience, yet punishes hesitation. It demands confidence, yet exposes arrogance. Trading big moves isn't just about finding entries. It's about surviving the noise between entry and exit. Livermore once described it as the sitting part that made the money. But he also admitted that this was the hardest discipline of all. Because the market plays on human emotion, and emotion, not analysis, is what determines who wins and who fades out. To trade big moves without getting shaken out, you must learn to detach. Not from the trade, but from the fear that rides along with it. That's the line between speculation and mastery. In this story, I want to take you inside that struggle, the battle between conviction and fear, between holding and folding. Because until you master that inner war, no strategy will save you. So ask yourself, how many times have you been right, but too early to see it through? How many times have you cashed out, only to watch the move double after you exited? Comment your answer below. I want to know how often the market has tested your patience, and won. Now let's step deeper. Because the real enemy isn't volatility. It's what volatility does to your mind. That's where our next section begins. The market has a way of forcing you to look inside yourself. Every surge upward and every dip downward becomes a mirror, reflecting your deepest fears and hidden weaknesses. Imagine this. You spot a setup, a classic Livermore pattern. Your analysis screams, "This is it." The trend is real. You take a position. At first, it moves your way, just a little. And then it pulls back, testing your resolve. That's when the inner conflict begins. Your mind starts a subtle war. One voice says, "Hold, this is a strong trend. You've seen this pattern before. Trust it." The other voice whispers, "Cut it now. Don't risk more." You could be wrong. That's the paradox of trading big moves. The closer you get to significant profits, the louder your fear grows. Livermore called this the mental battle of trading. He understood that markets aren't linear. They twist and turn to shake out the impatient. And they do it with precision, almost as if designed to trigger our insecurities. I've watched traders, even experienced ones, fall into this trap. They enter with confidence, then retreat at the first tremor of volatility. They sell a portion of their position and suddenly the market breaks out without them. Their pride stings, their mind races. I was right. But why didn't I stay? The inner conflict isn't about skill. It's about psychology. About how you react when the market behaves irrationally, even when your analysis is correct. Most traders fail here, not because they lack strategy, but because they cannot sit through the tension. Livermore wrote extensively about the market's test. He said that the first thing a trader must master is himself. Because if you cannot withstand the small fluctuations, you will never survive the large moves. The market will test your patience, your judgment, and your ego relentlessly. This paradox becomes even more dangerous in modern trading. We have real-time feeds, alerts, and constant confirmation. Every tick, every candle, every news headline tempts you to react, to chase, to hedge. But Livermore's lesson is timeless. Noise is the enemy. Conviction is the ally. Ask yourself this. When you've been shaken out, was it the market or your own hesitation that forced your hand? Think about the trades that got away, the ones that broke out after you exited. Those are your mirrors, showing where fear rules. Comment below what your last shaken-out moment felt like. Was it panic, doubt, overanalysis? Traders need to face this, to see the battle inside before they can master it outside. Next, we will dive into the psychological traps that steal profits, the ones that Livermore identified decades ago and still haunt every modern trader. You know that sinking feeling when a trade moves against you, even briefly? That heartbeat skip, the tightening in your chest, the voice in your mind whispering, "You're losing money right now?" And is the psychological trap that swallows more traders than any strategy ever could. It's subtle, almost invisible. The trade isn't even wrong. The setup is perfect. But your emotions are screaming louder than your analysis. And in that moment, most traders act not on logic, but on instinct. They close positions too early, take profits prematurely, or worse, reverse their trades entirely. Livermore called this the loss of nerve. He understood that money isn't lost on the chart, it's lost in your mind. You think you're managing risk, but in reality, you're managing fear. You're trading your anxiety, not the market. I've lived this. I've watched trades swing in my favor, only to pull back, and instead of holding, I caved. I convinced myself that the market had changed, that my initial conviction was wrong. By the time the trend resumed, my position was gone. I wasn't shaken out by the market, I was shaken out by myself. The core of the problem is impatience. The human brain is wired for immediate feedback. When we take a risk, we want instant confirmation. But markets are not instant. They are deliberate. They ebb and flow in ways designed to test your discipline. Every tick against you is a temptation. Every small loss is a psychological lever pulling at your confidence. Livermore emphasized that the trader's job is not to avoid losses entirely, but to avoid unnecessary losses. He said, "It is not good to be too curious about whether a stock will rise or fall. Your money is made when you follow the trend and let profits run, not when you second-guess your position." Modern traders face this trap amplified. Algorithms move fast. News cycles hit instantly. Social media screams predictions and opinions. Each message becomes a nudge to exit, a push to trade again, a distraction from holding. Every decision outside your original plan chips away at your conviction. This psychological trap is universal. It doesn't matter if you trade stocks, crypto, or commodities. The market exposes fear, doubt, and the temptation to control the uncontrollable. The question isn't whether the trap exists, it's whether you recognize it, name it, and resist it. Think about the last time you let fear dictate your exit. Did it save you or cost you more than you imagined? Comment below with your experience. It's not about judgment, it's about awareness. Next, we will explore how Jesse Livermore's mindset, his rules, and his disciplined approach help traders navigate this trap without giving into it. If fear is the trap, then discipline is the key. Jesse Livermore spent his life not just studying charts and trends, but studying himself. He knew that the greatest challenge a trader faces is not the market, it is the mind. Livermore's philosophy was deceptively simple. Never fight the market. Never fight your plan, and most importantly, never fight your own conviction. He observed that the market always has the upper hand. Its only power comes from your reaction to it. If you react emotionally, it will teach you a costly lesson. If you respond with discipline, it will reward you beyond measure. He said, "The big money is not in the buying or selling, but in the waiting." That waiting is active, not passive. It's a constant evaluation, a patient observation, a quiet confidence in the trend you've identified. You do not flinch at a pullback. You do not chase a spike. You do not argue with reality. You let the market move and you move with it. To trade big moves without getting shaken out, Livermore relied on several principles we can apply today. Hurs. Ride the trend, but identify your stops in advance, not as a fear-based exit, but as a disciplined tool. Accept minor fluctuations. A brief retracement does not invalidate a trend. Treat it as part of the process. Trade in size only when your conviction is absolute. Small, tentative trades invite panic. Confident, well-sized positions invite patience. Detach emotionally from every tick. This is the hardest skill because the human brain craves immediate reward. You have to train it to endure temporary discomfort for larger gains. Observe and learn from the market continuously. Livermore said, markets are never wrong. Opinions often are. When price moves against you, analyze without judgment, then align with reality. I remember reading about Livermore in the 1920s and thinking, how could someone have this level of control in the chaos of trading? And yet he did. He made fortunes not by predicting perfectly, but by mastering his own reactions. He used psychology as a weapon, not a weakness. Modern traders can take the same lessons. Every pullback you fear, every shakeout you dread, every moment of doubt can become your opportunity if you remember Livermore's mindset: patience, discipline, and conviction. The market will test you, but you are not powerless. You can endure the fluctuations, sit tight, and watch the big move unfold. Ask yourself now, in your next trade, how will you respond to a brief pullback? Will you react, or will you apply Livermore's discipline and hold? Comment your strategy below. This is the moment where preparation meets psychology. Next, I will share a real-world example. A story from a modern market where a trader either fell victim to this trap or rode the wave like Livermore taught. Let me take you inside a modern trading floor. Not in the roaring 20s, not in a ticker-tape office, but today. The charts are digital, the news is instant, and the temptation to act is everywhere. And yet, the lessons of Jesse Livermore remain unchanged. Picture a trader, let's call him Alex. He spotted a breakout in a tech stock. All the signs were there: volume expanding, consolidation breaking, the trend lining up perfectly. His analysis was flawless. He entered with conviction, fully aware of his planned stop. At first, the trade moved exactly as expected. Small gains appeared, and then the pullback hit, a sharp emotional test. Most traders would panic. They'd think the trend is reversing. They'd shrink their position or exit entirely. Many did. Social feeds lit up with predictions of a collapse. The anxiety was palpable, almost contagious. Alex remembered Livermore. He reminded himself, fluctuations are part of the process. The market tests patience, not intelligence. He held. He watched the charts, studied the trend, and refused to let short-term swings dictate his actions. 2 hours later, the stock surged past the initial breakout. Traders who exited early watched in disbelief. The move doubled, then tripled, and those who rode it captured life-changing profits. Alex's conviction paid off, not because he was lucky, but because he had mastered the psychological trap that shakes most traders out before the real move begins. Livermore's rules were alive in that moment: patience, discipline, and trust in the trend. No emotion overrode the plan. The small fluctuations that terrified others were treated as noise, irrelevant to the larger picture. The trade unfolded exactly as it should, and the market revealed the reward for endurance. This story isn't unique. Every major market move, from the tech boom to cryptocurrency spikes, contains the same psychological test. The market's pullbacks are not failures, they are deliberate trials of character. You will be shaken. You will be tempted. You will be tested. The question is whether you respond with fear or with Livermore's mindset. Now reflect on your own trades. Which ones ended prematurely because you let fear take the wheel? Which trades could have been home runs if you simply stayed seated, observed the trend, and let profits run? Comment below with one trade that taught you this lesson painfully. Recognition is the first step to mastery. Next, in the final section, we will tie all these lessons together into a cinematic conclusion, reflecting on emotion, discipline, and the essence of trading big moves without being shaken out. The market doesn't reward speed. It doesn't reward cleverness. It rewards endurance, patience, and the quiet confidence to follow your plan when everyone else is panicking. Think back to every trade you let slip away. The ones where fear dictated your exit. The market didn't change. You did. Jesse Livermore's greatest insight wasn't his ability to predict the market. It was his mastery over himself. He knew that holding through the storm, through the minor pullbacks, through the noise, was where the real profits lived. You can hear the chaos around you, news alerts, social chatter, the temptation to do something. And yet, the path to success is often doing nothing. Doing nothing that your plan doesn't require. Sitting tight while the market moves, while others flinch, while fear tempts you to fold. Every tick against you is a test. Every hesitation is a trap. Every time you resist the urge to exit prematurely, you are practicing the same discipline that built fortunes in Livermore's time and continues to define winners today. Imagine a market move unfolding exactly as you anticipated. Imagine sitting through it with calm, holding steady, and watching as your patience transforms into significant profits. That is not luck. That is psychology. That is discipline. That is the essence of trading big moves without being shaken out. Ask yourself, will your next trade be dictated by fear or by conviction? Will you be a trader who chases or one who waits? Comment below with your commitment to mastering patience in your trades. This is the moment where reflection turns into action. Remember, the market will always test you. It will pull, it will push, it will provoke every emotional weakness you carry. But if you follow Livermore's principles, ride the trend, trust your plan, sit tight, and detach from the noise, you will see the difference between reacting and profiting. So the next time a trade challenges you, remember, the storm is temporary, the move is real, and your discipline is the bridge between fear and fortune. Ride it, endure it, master it. Your journey as a trader isn't measured by every trade you take. It's measured by the trades you hold, the patience you practice, and the lessons you carry forward. The market will always test you, but you can choose to rise above. Now go back to your charts, study your patterns, identify your emotional triggers, and commit to trading the big moves the Livermore way. Comment below with the one psychological habit you will change in your next trade. This is your starting point. Your edge begins where fear ends. The market is waiting. The move is coming. Will you be ready to hold,